Good morning, traders. It's Monday, August the 8th. Taking a look at the charts, we've got the SP 500 futures here. You can see today, let me just zoom in here. You can see today we're continuing to move up a little bit higher. Our forecast talked about last week when I went through it in detail in a video, how we had another week and a half, potentially 2 weeks of the market kind of grinding its way up to these nominal new highs and really kind of getting overhanging here before I think we could see a very significant drop. And so the cycles look like they're going to top out either at the end of this week or beginning of next week. That'll give us, I think, some at least a pullback and potentially some big choppy sideways. And if things go as I kind of expect, we could see a much larger decline, something very significant, going even below these levels, looking forward the next month and a half, 2 months here. So overall, price continues to grind higher. We do see money continuing to hold tight in the safe havens. If we take a look at gold and silver, they have pulled back. Obviously, good jobs number last week sent stocks higher, and the safe havens pulled back. But safe havens have just pulled back to their short-term support zone, which is where they kind of broke out of and popped up. More or less, it's kind of ping-ponging between resistance and this support level. There's potential it could come down and test down a little bit lower here, build a larger consolidation before, more or less a launch pad, before it continues to go higher. For example, we just draw some lines in here. You can see we've got a big run up. It could consolidate in a range like this, build this big bull flag, and then we see the second half of that run move up and test that $1,400 per ounce and much beyond that level. Now overall, take a quick look at silver. Silver's down slightly this morning. It did gap down and it's muscling its way back up. Came right down into support into these spike lows here. Again, it's had a nice run up. It's going to consolidate here. Cycles and Elliott wave show that we're going to have a little bit more of a kind of a D wave correction. We could see again, it could come down and test somewhere lower into this area, this support, this breakout zone. Also, the 20-day moving average will come up here and act as support. We'll see how things kind of unfold. Overall, very bullish price action still. All we're doing is taking a breather as it's trying to regroup before it takes another run higher. And of course, that's the same for gold, silver, and miners across the board. Miners moved up, pushed to new highs. They're pulling back a bit. And again, they're just kind of continuing to work their way higher, making higher highs and then higher lows, and just kind of continue to oscillate and move up. Now, if we take a look at crude oil, it's up about 1.75%. This is what we talked about a week and a half ago, right over here, where I mentioned we had mixed cycles. We're going to start to see some big price volatility in crude oil, meaning big down and big up days. And I think we could see some more of this chop. And we talked about it, how it could easily chop around in a sideways price action here, build a little bit of a base, or potentially a continuation pattern could form. We do have a move down here, and this could be some type of consolidation, a halfway mark. We could continue to see it move lower, but at this point, we still have cycles kind of pulling down. We have a short-term cycle bouncing up, which is where we're following here. And I think we could still see more volatility. And once all the cycles bottom, then there is potential for this to continue to move up to 44. And we have that level coming all the way up to the 46, which is a pretty significant line in the sand right through all these pivot highs, these pivot lows, these this breakout zone and pivot highs over here. So we'll see how that unfolds. Overall, the bias is still kind of to the downside. Right now, it's kind of neutral. We have mixed signals. But overall, cycles show that we could come up here or just come up to this 44 level, and then we still have another down wave in the market. So depending how that plays out, we might just see crude oil continue to just chop around here with the mixed signals for another month or so as it tries to figure out a direction. Looking at natural gas. Natural gas has had a pretty significant run. It's been consolidating here. We've seen some nice pops and then fades back to the downside, and then another big pop, a fade. I talked about this in I think it was the SPY the other day, where when you have these inside bars. So let me just grab a tool here. So you've got this big up day, and then you have 3 days that fade back within that bar. And usually 3 days, you'll see the market have another jump. And when they're inside bars, it's usually a bullish sign. So when this bar is up and you have 3 days fade down inside that bar, usually you see that next move to the upside, which we've seen that. And you can see we had another kind of fade back down. This is a much larger bar, but it faded down. And then boom, we had another pop. and more or less prices still trading in this other bar, but very bullish price action. We're seeing big money pile in, and then we're just seeing some profit taking, people kind of selling off and putting a little bit of down pressure. So somebody's accumulating. These big spikes are accumulation spikes. This kind of lower volume kind of fade back down is just people kind of rotating, contracts moving in from hands of weakness who are scared of the price falling into people who are bullish and accumulation. So overall, if we zoom back on the chart here, you can see we've talked about this for a long time. Whoop, a little far there. Now we've got this major bottoming formation that looks to have taken place already. We came down, sold off, consolidated, had another big wave, and this was the panic selling wave where we saw waterfall sell-offs, a bounce, another waterfall sell-off to a lower low, and then a bounce, and another kind of waterfall sell-off to a new low. This is 3 surges to a low. Usually if we get 3 surges to a low in this type of price formation, this type of look to it, or 3 surges to a high, they're fairly significant reversal points. So the market came up, found support here with a nice little pullback, exploded, broke to the upside. Of course, it's trading through all this heavy volume, this other consolidation area. But this here to me looks like a fairly significant base. And really, I think the trend has already changed. We've seen more or less this was kind of the breakout. This was the bottom, this was the accumulation, and we've seen a huge pile move in here. And this is like a much bigger basing pattern right through here. So it's got some work to do. It's trying to eat through all this volume, trading sideways. And if we were to throw Fibonacci extension on there, which will give us some price targets, we could, depending where you want to go, I'm going to go from this low here go to this high, and say it consolidates somewhere over here. Say it potentially pulls back to the 20-day moving average, be conservative somewhere over here. You can see the price action's got potential to move all the way up for a 100% move. So from this low to this high, and then the consolidation, the next run up, the next price targets would be the 319 and then the 3 more or less 60 per unit here to the upside. So there's lots of potential. I really like natural gas, and typically I haven't talked about it in a long time, but usually when we see the stock market selling off in a big way, we see natural gas performing really well. And if you go back in time, natural gas did really well during major sell-offs in the stock market and crashes. So it's kind of interesting that natural gas is putting in a major bottom when it looks like the stock market's putting in a major top. And you know, I think we could easily see this continue to run up all the way from the 275 to the 360, significant run to the upside. It may consolidate here for potentially even a couple months, but overall you can see that it's broken its first minor bottoming formation. Now it's at a more of a major basing formation. If it breaks this, we're going to see a huge run up to this level. So really starting to like natural gas. I'm going to write an article on it showing, comparing how it performs during bear markets and weak times in the stock market in general. Taking a look at UUP, actually I'm going to go to UDN, which is the ETF that we are long. We had a nice play in that. I'm going to go to the 10-minute chart. So some of you got stopped out. I got stopped out the last trading session on Friday, more or less. We entered into the trade right over here where when the market opened. We saw a drop in the dollar coming, and we jumped on board. It kind of faded back here, and then the next day gapped higher. The next day gapped higher and hit our first price target. We took money off the table here, and we moved our stop back to break even, which was the 21.85 area. And of course, the market on Friday saw our orders most likely, and of course, it opened at 21.85. Took us all out, and then it kind of started to rebound back up. But overall, it was an awesome trade. We got in, we caught the move, made our money, protected the balance of our position, and again, we might have another great opportunity to get in here, but at this point, I think we could see the UDN continue to move down and potentially for a little bit further. Because keep in mind, all these price gaps work as flagpoles. For example, here, you have to draw the lines to fill in the blanks, but we've got this beautiful bull flag that formed here. And then you have the second half of that move to the upside, another huge run. It consolidated here, and then we saw another big move up, and then it kind of got toppy and hit resistance. This was our first resistance zone going on the chart, looking way back in time, which is why it was our first price target, because it'll be the first area that the market hits, that if the market's not strong enough to muscle through it, it's going to reverse and come back down. And we've seen that. We've seen the market move down, it consolidated a little bit, and then it had another big gap down, and it's consolidating with a bear flag, so we could continue to see this move down and unwind, and we might have another great opportunity in time to get back in UDN, because I do feel as though the US dollar could have a pretty significant fall going forward. Another area to look at here is the DBC, which is the commodity index. It has a pretty nice bottoming looking formation where it's sold off, consolidated, sold off again, consolidated, sold off. And it's got the same pattern, same type of growth here or price action that is very bullish. This would be very similar to the natural gas chart where I talked about this is the first early stages of the bottoming kind of being completed. And then, of course, this would be the next major basing pattern for commodities in general. So for example, natural gas has already moved up considerably and is trading right here trying to eat through this volume. The commodity index in general, though, is trading right down on this low. This chart almost mimics the way we saw natural gas. It just shows the commodities in general haven't quite kept up with natural gas. It's kind of leading the way. So we're going to keep our eye on this ETF. Could be a great play for us to get in and see this continue to move up. We can put a fairly tight stop in it under a recent pivot low here. And if this does catch traction, we've got a significant run just up to even to the 18 level from where we're at will be a significant run. But from that level, if it does break out, we see commodities explode, the US dollar fall down, we're going to see a much bigger rally in the commodities in general and a big move up there. So this is something we're going to keep our eye on and potentially take a play very soon in. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.